It's like, is it your property or not? Just for being on your property, you got to write a check to the government every year. So I think that that's a big issue.
They say it's a mix of burnout, limited job growth, and shifting lifestyles. And the list just keeps getting bigger, pushing some residents to reconsider their future here.
Millions of people are abandoning their houses in Florida, leaving panic among governors. 6 insurance companies have collapsed since 2022. Leaving over 1.3 million homeowners scrambling for coverage through the state's insurer of last resort. What started as Florida's greatest housing boom in decades has become a financial nightmare.
South Florida is among the top 5 metropolitan areas in the country where home sales are shrinking.
Nobody saw this coming because everyone was too busy counting their profits. Between 2021 and 2022, South Florida transformed into America's ultimate destination. Over 330,000 newcomers flooded in within a single year, pushing the state's population past 22 million for the first time. License plates from New York, New Jersey, Illinois, and California became as common as palm trees in grocery store parking lots.
Salaries here just don't add up to the cost of living here, but just overall the cost of everything is so much more expensive than it was 4 years ago.
Families freed from office commutes chased backyards and sunshine while retirees cashed out their northern properties for Florida dreams. International investors from Toronto, Sao Paulo, and beyond snapped up condos sight unseen. Miami's real estate agents reported a staggering 60% jump in out-of-state inquiries, with open houses routinely drawing lines down the block. What I'm about to tell you will shock you. A 3-bedroom home in Boca Raton that sold for $480,000 in 2019 fetched $975,000 by spring 2022. The median sale price in Miami soared past $560,000, and even previously affordable neighborhoods like Kendall and Sunrise became battlegrounds for bidding wars.
I think for younger people like myself who maybe get out of college and maybe even get a 6-figure job, but it's still not enough, where townhomes when I was growing up were $200,000, $300,000 maybe.
Developers raced to pour foundations, promising luxury towers from Homestead to Jupiter. Out-of-state investors pulled cash for bulk deals, betting on endless growth and sunlit returns. Short-term rentals multiplied, transforming entire blocks in Miami Beach and Fort Lauderdale into revolving doors for vacationers. Florida issued over 70,000 new building permits in 2021 alone. Yet the gap between supply and demand only widened.
Because I think it's been really something that's pinching a lot of homeowners, particularly seniors on fixed income.
Property tax revenues ballooned, funding new schools and police stations. But infrastructure buckled under the weight. Traffic thickened on the Palmetto and I-595. Water systems stretched to their limits. Classroom overflow became routine, and starter homes turned into luxury purchases requiring patience, luck, and deep pockets. But here's where it gets interesting. Beneath the celebration, cracks were already forming. The region's exposure to sudden shocks grew with every moving truck crossing state lines. What nobody anticipated was how quickly the dream could flip to disaster.
More frequent natural disasters like Hurricane Helene, higher insurance rates, and HOA fees are to blame for home sales stalling.
By early 2022, South Florida's housing market had evolved into a proving ground for the most aggressive bidding tactics in the country. Homes rarely survived a weekend without multiple offers, most landing well above asking price. A modest ranch in Fort Lauderdale, listed at $420,000, collected 17 offers in 3 days. The winner paid $515,000, waived inspection, and closed in under 2 weeks. Cash flush buyers became indifferent to details, while hedge funds wired millions for condo bundles they'd never seen. Speed replaced negotiation as the only competitive advantage. Agents coached clients to offer above list, skip contingencies, and wire deposits within hours of showing. Some desperate buyers wrote personal letters or offered to cover sellers' moving costs.
I think for younger people like myself who maybe get out of college and maybe even get a 6-figure job, but it's still not enough, where townhomes when I was growing up were $200,000, $300,000 maybe.
What I'm about to tell you will shock you. Out-of-state buyers routinely outbid locals by tens of thousands, often without ever seeing the property in person. Developers couldn't keep up with demand despite installing model homes and handing out glossy brochures. Waiting lists stretched for months, with buyers paying premiums just for a chance at the next available lot. The old rules, negotiation, due diligence, patience, vanished as markets rewarded aggression. International investors from Bogota and Toronto kept betting prices would climb forever, sun or storm. The result felt unstoppable until sticker shock started pricing out entire segments of buyers. Mortgage rates began edging upward by late 2022, but the real barrier became affordability. For every new listing, fewer qualified buyers appeared, demanding concessions and rate buydowns. The gap between seller expectations and buyer budgets widened, especially in condo towers and coastal neighborhoods, experiencing the fastest appreciation. Then came the insurance apocalypse. 6 companies failed in 2022, leaving homeowners scrambling as hurricane season approached. These weren't minor regional carriers. These were established insurers whose collapse sent shockwaves through every closing table from Miami Beach to Boca Raton. New policy quotes for typical homes in Broward and Miami-Dade pushed past $5,000, with coastal addresses facing bills above $8,000. That's nearly double the statewide average, but for buyers in the hardest-hit zip codes, sticker shock became a deal-breaker reality. Each carrier exit triggered panic among agents, lenders, and title firms as binding moratoria landed in inboxes minutes after forecast updates. I bet you don't know that the private market's retreat forced hundreds of thousands into Citizens Property Insurance Corporation, the state-run insurer of last resort. By summer 2023, Citizens covered more than 1.3 million homes, nearly 1 in 8 statewide. That safety net designed for emergencies now carries everyday business weight. Every new policy expanded the risk pool, threatening special assessments that could hit all policyholders if claims outpaced reserves. Even private insurance holders weren't immune. If Citizens ran deficits, every Florida homeowner could face surcharges. Ocean temperatures off Florida's coast hovered 2 to 3 degrees above normal in early August, setting perfect conditions for what became Hurricane Erin. On August 11th, the National Hurricane Center issued its first Category 4 advisory, sustained winds at 160 miles per hour, a wind field wider than the state itself, and a projected track keeping every realtor, lender, and homeowner glued to updates. If you're finding this breakdown as eye-opening as I am, smash that subscribe button, because what happens next will change how you think about real estate forever. Emergency managers called midnight meetings while the governor's staff fielded hourly briefings from Tallahassee. Insurance companies triggered immediate binding moratoria. No new policies, no coverage changes. Lenders froze funding in every zip code inside the storm cone. Title companies sent warning emails, flagging wire transfers, and urging delay preparations. The market seized overnight. Showings canceled, contracts stalled. Buyers who'd spent months house hunting faced new uncertainty. Would closings even happen? Some sellers slashed prices to retain nervous buyers, while condo boards passed 6-figure special assessments as revised flood models landed on their desks. If you think this is it, there's more that will leave you wondering. Within 72 hours of Erin's upgrade, pending sales in South Florida dropped by nearly 1/3. MLS dashboards lit up with cancellation notices, especially in coastal and high-rise zip codes. Mortgage approvals evaporated in storm surge neighborhoods, while every NHC alert triggered fresh rounds of lender and insurer withdrawals. A Chicago couple 2 weeks from closing on a Coral Gables townhouse received their lender's email: insurance moratorium, funding paused, contract void unless coverage materialized. 3 broker attempts later, the deal died by dinner. Hedge funds abandoned $12 million condo portfolios, citing force majeure and invoking hurricane clauses buried in contracts. Earnest money disputes piled up as attorneys pointed to insurance contingencies and lender withdrawal floods. Title companies logged reason codes, insurance contingency failure, funding freeze, and force majeure faster than processing paperwork. First-time buyers watched insurance quotes double overnight, while pre-approvals vanished days before closing. Miami Beach condo boards called emergency meetings after insurers demanded six-figure coverage increases. Buyers rescinded offers within 24 hours, each citing unforeseeable risk. The math was relentless. Every hurricane alert triggered more contingency invocations, frozen funds, and collapsed deals. 48 hours after the Category 4 advisory, Tallahassee went into overdrive. Governor Ron DeSantis convened an emergency housing task force, summoning agency heads, insurance commissioners, and legislative leaders to a war room lined with storm maps and MLS dashboards. The directive was crystal clear: stop the bleeding before panic spread beyond coastal areas. Draft executive orders circulated by noon, promising immediate residential eviction halts and foreclosure suspensions for at-risk properties. Staffers worked through nights, fielding calls from county officials and real estate lobbyists, warning that mass walkaways could gut tax rolls and trigger default cascades. What I'm about to tell you will shock you. DeSantis' first public address came August 14th, flanked by insurance executives and emergency managers. "No one will lose their home to red tape while this threat remains," he declared, ordering Citizens Property Insurance to expedite claims and directing state-backed carriers to offer temporary policy extensions for mid-closing victims. Behind closed doors, task force meetings grew tense as numbers rolled in. 30% of Tri-County pending sales had collapsed within 3 days. Local officials warned of political fallout if families lost homes or watched values crater. The governor's advisors flagged contagion risks. If the crisis spread north, it could destabilize Sunbelt markets from Georgia to Texas. DeSantis' office issued daily updates touting relief measures, but hotline wait times stretched into hours. Callers asked about eviction freezes, insurance extensions, and pending closing fates. The message emphasized reassurance, but reality remained a market held together by emergency orders and political willpower. Ripple effects began registering across state lines almost immediately. Atlanta brokers fielded hedge fund calls about rebalancing portfolios, offloading Florida exposure for safer Carolina and Texas bets. Home searches redirected from Miami and Fort Lauderdale to Charlotte, Raleigh, and Austin, with some markets reporting 20% out-of-state inquiry upticks within days of Aaron's bulletin. I think what we've witnessed isn't just a regional hiccup, it's a preview of how quickly modern real estate markets can unravel when reality crashes into speculation. Hit that subscribe button for more deep dives into the stories they don't want you to see.